so do I need to stay right here?
Within the range of the desk. Yeah.
Okay, perfect. I started to say I use a PowerPoint just to kind of keep me on track and make sure I don't miss any important points. So feel free to take one of these if you like, if you're a person who likes to take notes, and if not, no big deal, okay? There are extra folders up here if there are people that have eligibility for the life insurance that might not have been able to make the meeting today. So I'll introduce myself. I am Stephanie Pataxel, and I represent the Cincinnati Life Insurance Company with the Henriott Group here and just across the street over there. And your company, Lafayette Urban Ministry, has decided to extend an opportunity to you for voluntary life insurance. And I always get, it's hard to see people's facial expressions with our masks on, but sometimes I get the eye roll, and, you know, sometimes people are like, really? We have life insurance. But the one thing that, I mean, it's for certain we're all going to leave this earth at some point in time. And sometimes it leaves our families in a really challenged position if we haven't at least had a conversation about it prior to that happening. So your leadership is bringing this to you as an opportunity to I'll talk about it. You can go home and talk to your families about it. And if it's important to have a conversation, then let's talk, you know, if it's valuable to you, then let's talk through it, okay? It is a high-quality life insurance program, and one of the things I love about the Cincinnati product is that it's not a one-size-fits-all. You know, as you look around this room, we all have different family dynamics, and so this Cincinnati Life program actually offers 3 different types of life insurance, and I'll kind of go through those briefly so that you can talk to your families about it at home. It is payroll deducted as long as you work for this organization, but if you leave the employment of Lafayette Urban Ministry, nothing about your policy changes. You just call me and you say, hey, Steph, I don't, you know, I'm not employed, or I retired. And Cincinnati just can they can either bill you at home, or they can have it deducted on a monthly basis out of your checking or savings account. They make it super simple. We've done this enrollment in a lot of large and small organizations throughout the state of Indiana, and this is one of the things that Cincinnati does. So it's a pretty well-oiled machine in terms of transitioning if you do leave the employment of LUM. It's your personal policy. So a lot of people say to me, and it's not necessarily the case for all of you, I have life insurance through my employer. Well, that's great as long as you have a job. And then, you know, life changes and you're no longer employed, and I think COVID kind of created an awareness of that for all of us. And so this is your personal policy. You own it. You can change things about it throughout the life of the policy. Coverage is available for you, your spouse, children, and grandchildren, okay? It is completely voluntary, and for that reason, I do get some pushback on the fact that we do ask if this life insurance isn't needed for your family, that you sign a waiver. And a lot of people are like, are you kidding me? It's voluntary. Why do I have to sign a waiver? And the reason we ask you to sign a waiver is really for your family. We had an instance at a very large manufacturer here in Lafayette. A gentleman went home, talked to his wife. They agreed that he was going to buy a $50,000 life insurance policy. He came to work on Monday, and he signed a waiver. And 2 weeks later, he was killed in a motorcycle accident. And his wife came to HR because she knew that policy was in place. And in fact, it wasn't, because he had signed a waiver. And so, while it feels imposing, if you were standing in his wife's shoes, you would be glad to know that, Cincinnati didn't lose my paperwork, my employer didn't lose my paperwork. There's documentation that for some reason I opted out of this option. Make sense? Okay. So a lot of people want to know why do we need life insurance? Like how do I know if I need it? How much do I need? And so I break it down into the L, I, F, and E of life insurance because I think it's easy to remember, okay? So L is really for our liabilities. If something happened to me today, what things are is my other half going to be responsible for? And it usually, is reflective of mortgage or car payments, credit card debt. And the other biggie, which probably or may be very relevant to the two of you, is financial aid, college debt. And if your parents or any of you have co-signed for student loan debt, it is a very, very common, large debt today. And, a very inexpensive term policy can protect against that in the event that, God forbid, something, happened to one of our young people. So I always mention that because parents that have co-signed loans and students really want to know that how to protect from that. The I is for income, and it's really income replacement. So how dependent am I on my spouse's income? How dependent is he on my income? And if something were to happen, would it be important to, fill that gap for a short period of time or maybe for a long period of time? F is talking about final expenses. And in the state of Indiana, the average funeral runs between $18,000 and $25,000. And so, it's hard to talk about. Who wants to talk about their funeral? But, your family might appreciate it if you have that conversation. So, put that out there. And then E is education. And a lot of people, particularly with young children or grandparents, it's very common. They want to provide for the education of grandchildren, or parents want to make sure that there's finances to make sure children go to college. I use myself as an example. When I moved to Lafayette, I had a son that was a freshman in high school. And I am his sole provider. And I knew if something happened to me, I needed to get him through somebody had to take care of him. I had to get him through high school and college. So I took out a 10-year, $350,000 life insurance policy, just to make sure that he was through college when that expired. It was very inexpensive, but it helped me have peace of mind that, if I didn't last that 10 years, he had the means to enable someone to take care of those things for me. Make sense? Okay. So, let's see. What do we have here next? There are 3 types of life insurance. And if you open your folder, I'll come back, Pablo, I promise. We'll talk briefly about them. I don't expect you to be an expert, but if you do want to talk to your family, this will make it easier. So feel free to write on the top of these if that's helpful to you, okay? The green is called term insurance. And term insurance is like renting or leasing. At the end of the term, if you lease a car, you turn it back in. It goes away, okay? So term insurance is very inexpensive. but at the end of the term, it goes away. It's just gone. There's a 10-year term and a 20-year term available. Welcome. And the way you determine, thank you, what you would pay per pay period, let's look at the 20-year term non-smoker rate, okay? So your rate sheet should say 20-year term non-smoker. We'll look down the left side of the page and we'll go to our age. And let's say Josh is 35. And we go across. You can see that if he wanted $100,000 worth of protection, that would be $1,350 per pay. Okay? And you would calculate that the same for the spouse. The children are typically covered on what's called a children's term rider. And that is $2 per pay for all of your children, whether you have actually children and stepchildren. So whether you have one child or 10 children, it's $2 per pay. Make sense? That puts a $10,000 policy on the children. So if you want something over and above that, we would need to talk about a different product. But typically, families cover their children with a children's term rider. Any questions about that? Sometimes it's insurance speak and it sounds confusing. Okay, that's term insurance.
That's only up to 60, right?
Say it again.
Only 60 years of age.
The 10-year term goes to, I think, 70. Let me look at that, Eileen. I should know that off the top of my head. 70, yeah.
Term goes to 70.
The 10-year term goes to 70. The 20-year term goes to 60.
I see.
Makes sense?
Mm-hmm.
So if we're above that age, then we don't, we might as well not consider it.
It wouldn't be applicable with this program, but if you want to talk about some other program, if you need life insurance, let's talk about it. And if I can't help you, I'll connect you with somebody that can.
I think the only thing I need to know is if, my one question about insurance is this, if I have prepaid my funeral, do I need life insurance?
Oh, that's a really good question. Did you all hear that? I think it's are there any other obligations that you will need to satisfy? Then if you feel comfortable with that, I would, I think you answered that, that question.
I think the only reason I would is to have an X amount of dollars to give to my daughter in case she had things.
Yeah.
Do I want to pay, because it keeps going up, because I'm 78.
Right?
And so it just keeps going up, and I think it only goes to 85.
So do you all hear what, what's your name, honey?
My name is Connie.
Connie, do you hear what she's sharing? She said, every year my life insurance goes up. The price of this life insurance will never change. So whatever, I'm guessing you're 24? 26. So life insurance is never going to get less expensive. The cost of life insurance is driven by age, health, physical size, and whether the pizza guy is here. And whether or not you smoke. That's Bob. He's with the Henriott group right there. And so that's one of the things that is truly a benefit of the program is that if you buy life insurance when you're 26 years old, you're going to pay a 26-year-old premium. If you buy life insurance when you're 70, the premium is going to be significantly higher because the cost of insurance is higher because of her age. Does that make sense? Okay, but the Cincinnati product never changes in price. So to your point, if you did purchase this, your premium would never change again. It would not get more expensive. It would, whatever you bought it for today, it would stay at that price. Does that make sense for everybody? Thank you for asking that question.
I'm curious because when you're old, because I know that they term out.
Right, and this will not term out.
I don't know
Okay, second type of insurance is term with return of premium. This is kind of it's a win-win product. It operates the same way in that you go down the left-hand side. We'll look at term 20, non-smoker. We'll go down to that 35-year-old Josh, and we'll go all the way over to $100,000. Now that would be $57.65 per pay, and you might be saying, holy smokes, the other one was $13. What's different about this? So this too is a 20-year term. So Josh is 35. It's going to expire when he's 55. But when he's 55, they're going to say, hey Josh, do you want to check for all of your premium back, $23,982? Or do you want us to keep your money and we'll send you a policy for $69,600 that's paid for in full? Okay, so in the English language, what does that mean? That means that if Josh lets Cincinnati keep his money, he's going to have a $69,000 life insurance policy for the rest of his life that he never owes any more money on. Make sense? So this is a term product in the sense that it expires in 20 years, but it doesn't really expire. You either get a permanent policy or you get your money back. Okay? That's the red one.
That one only goes up to age 50?
It does. I know. I love that product. And we can do it fully underwritten. This is guarantee issue, so we can't do it through this program, but if you have an interest and want to talk about it, let me know. The last one is a traditional whole life, and if you go home and talk to family members, or Eileen, this is probably a very familiar product to her. Whole life has been around forever. It's intended to be a permanent product, so you will have it your whole life, okay? You have a death benefit bucket, and you have a cash bucket. So whole life kind of acts like an investment, if you will, okay? You'll get an annual statement that will let you know what your cash value is, and it is intended to be a permanent product. There are two options for whole life. There's one that will be paid up at 65. So if you're 26 and you purchase a whole life policy, I'm going to say, let's get this paid for by the time you retire. So you're going to pay a little bit more premium, but when you retire, the policy's paid in full. You'll have protection the rest of your life. If you look at the other option, it's a pay to 100 option. So essentially, you're going to pay on this policy until you're 100 years old. You'll have the protection till you're 120. So listen, it would be an option for you. No? Oh.
I wouldn't bet against you.
I know, right? Okay. So if we look at the paid up at 65 option, non-smoker, biweekly rate sheet, we go down to 35-year-old Josh, and we go over, let's flip that page over so you can actually see an apples to apples comparison. This would be $53.50 per pay. And again, this would be paid for in full when Josh turns 65. Okay?
And these are bi-weekly.
These are bi-weekly. Yes. Any questions on how to read the rate sheets? No? Cool. So there are also some riders that are available, and I won't get into a lot of detail, but riders sit on top of your policy. I talked about the children's term rider. That's to cover your children. There's an accidental death rider. So if you are killed in an accident, it doubles your death benefit. So if Josh took out a $100,000 policy and he was running and he was hit by a car, he would get his living benefit